know what she said. She might just change your life.
And we are going to talk a little bit about financial innovation in the studio. Our guest, Eva Wong, who is the Chief Operating Officer of something called Borrowell. So, Eva, how are you?
I'm very well. How are you?
Good.
Yeah,
Financial innovation.
Yes.
What is Borrowell?
Yeah. So Borrowell exists to help Canadians with a problem that a lot of Canadians have an issue with, which is credit card debt. So Canadians, something like 30 to 40% of Canadians don't pay off the balance on their credit card every month, which means
30. Did you say 30 to 40%?
30 to 40%.
I would have thought that number would have been way higher.
Oh, that's interesting. Yeah, I mean, it's possible that it is because there's not a specific body that sort of tracks them, but estimates are 30 to 40% don't pay it off, which means that we're borrowing at 20% interest. And we just think that's sort of like patently unfair. There's lots of Canadians who've got good credit that really shouldn't be paying 20% interest. We sort of say, with car insurance, if you're a good driver, you get rewarded with better rates. And we think that if you've got good credit, there's lots of Canadians who've got good credit who are subsidizing people who maybe aren't as good at repaying back their bills by paying that 20% interest. And so what Borrowell does is we allow Canadians to come onto our website, fill in a really simple form, and we'll give them a personalized rate of interest that reflects who they are as a borrower. So people who've got good credit get better rates, and we can give them a loan to pay off their credit card and then actually pay it off. So we have 3-year and 5-year term loans, which means that it doesn't revolve for, I think sometimes it says on the statement, if you only make the minimum payment, how many decades you're going to be spending paying off credit card debt. You'll pay off the whole thing over 3 years or 5 years, and that's one of the things that we offer and we hope Canadians will do.
And where did you come up with this idea?
Yeah, I mean, the thing that's interesting is that this idea is happening all over the world, and it really just hasn't come to Canada. Like many, many other things, I think Canadians often feel like, why do, Americans always get the best deals? And it's true not only for sort of cross-border shopping, but it's true in financial services as well. I thought it was interesting. You're like, financial services innovation, like what is that? I don't think as Canadians we're really used to hearing about innovation in financial services. So it's not a brand new idea. It's taking off in lots of other countries all over the world. We're just bringing it to Canada.
Okay, so you're breaking a mold in Canada. Like one, you're a woman holding a top position at a tech startup, which is great. Congratulations.
Thank you.
But this whole financial innovation, what happens? I mean, I think it's great now because I've always said to people it's cheaper to go and get a bank loan.
Yeah.
At even if you're paying like 5-6% than it is and pay off your credit card and pay back the bank loan.
That's right.
So, one, why do you think banks make it so hard to pay off credit card debt and charge so much? And what happens when they see you and what you're doing and they try to counter it?
Yeah. So I think it's sort of the classic innovator's dilemma in terms of it's hard for them to, credit cards are really profitable for banks. So,
yeah, I know.
And it's actually not easy for banks to do what we're doing, which is having to sort of personalize a solution for each individual. So to go in to get a bank loan, first of all, you have to go into a branch, make an appointment, and probably go in not just once, but twice or even 3 times to provide the right paperwork, to, for them to take that in, for the bank to decide whether or not they want to give you a loan, how much, the interest rate. So you can go and get a loan, but it's not that easy. And I think for banks, we're still very small, and banks obviously do a whole host of other things. We're competing with the banks on one aspect of this, but we think that it may be an area where they actually don't want to, they actually maybe don't want to give it a lot of bank loans because it is a sort of very paper-intensive, people-intensive kind of process.
Well, it occurs to me, for example, I have a credit line, and it's a minimal amount.
Right.
So if I couldn't, I've never paid a cent in interest on a credit card, but if I couldn't pay off the credit card, I would simply go to my credit line, which is 3.25%.
Right.
So why would I need you? Are you more competitive than that? Because that's pretty easy. You go in to do whatever, and you say, I want a credit line
Yeah.
Maybe it's against your house or something.
Yeah,
A
yeah. So
secured
there,
loan.
yeah, that's the thing. Sometimes people don't have access to a secured line of credit, and the
Okay.
banks are clamping down on that now. So it's actually
I
harder
know,
today.
I know. I've been told
Yeah.
don't pay it off because you won't get it again.
Right. So there's lots of regulation that's happening because banks take our money as deposits. They have to keep a certain percentage, and they can't sort of lend out or even sort of promise that they could lend out more than they've got certain ratios they have to keep track of. Because again, they're taking in people's money, so if people want their money back, they have to make sure that they can give it back. And then, not everyone owns a home, and now with housing prices the way they are, even if you do own a home, you have to have a certain amount that's paid off before you're allowed to borrow against it again. So there's a lot of people now who, either have recently bought a home or who actually aren't able to buy a home.
Yeah, so
Because of credit card debt.
So what you're saying is it makes sense, but that's not accessible to a lot of people.
That's right. I mean, I would say the other thing that's interesting is there is a forced discipline of having a 3-year term loan. That that monthly amount is going to come out of your bank account on the same day every single month, and you're going to pay that thing off over 3 years or 5 years. A line of credit is a little bit. It requires a bit more discipline on the individual's part because you can pull more out of it, right? It's you can always you can pay a little bit back. You can make the minimum payment, but then you can pull more out. So I think for someone who really is wanting to, start fresh with a clean slate, it's better to sort of take a term loan, pay the whole thing off, and you're on this, you sort of wiped it clean and not have the temptation of being able to pull more out of a line of credit.
So take us through the process. Say I want to borrow $20,000.
Yeah.
What am I going to do? What are you going to be looking at?
Yeah, so you're going to come to our website and fill out a really simple form. It's borwell.com, and you'll just fill in your name, address, basic information, your birth date, so that we can find your file with the credit bureau.
Okay.
Yeah.
Stop there.
Okay.
Every time somebody checks your credit rating with the credit bureau, your score goes down.
So that is typically true, but we're able to do something. We're actually one of the first in Canada to arrange with the credit bureau that it doesn't affect your credit score to check your rate.
Excellent.
Yes.
Okay.
Yeah.
Very good. Because
Yeah,
that really annoys me.
That annoys me too.
It's
Because
like you go to a couple of banks to say what's my best mortgage rate, and your credit score is going down. It's like I'm not borrowing. I'm asking. I think that's awful. Anyway.
So actually with mortgages, they are doing something that's relatively new where if you are inquiring for a mortgage with, say, 4 or 5 different companies, they will group that all together. If it's within a 1-month period, they recognize you're not going to go get 4 and 5 mortgages, that you are sort of, rate shopping. So they do combine those together and will allow you to.
Yeah, but what about people that don't ever even end up getting that mortgage? They're
Right.
just looking at mortgages, looking
Right.
at properties, then they end up
Right.
not going through with it.
Yeah.
And their score goes down. They haven't done a thing.
Right.
Okay, so
Right.
back to so you've
Yes.
managed to fix that.
Yes, we
Well
have.
done.
So people can fix.
Okay, so that was
can
my
check their
number
rate.
one question.
Right.
So then, what else are you going to be looking at with me?
Yeah, so essentially what we'll do is we'll look at a number of different factors. We do it all real time in literally like less than a second. So we'll just look to see, what's your credit score? Have you been good at making payments in the past? Because we think, there's a couple of things we look for essentially is, your willingness to repay and your ability to repay. So the willingness is based on what you've paid back in the past. Have you been good at making your payments on time? And the second is the ability to pay. So we'll look at what you say your income is. We'll look at all the debts that you have outstanding, and we'll sort of say, can you afford this loan? Because we want to make sure that maybe you're willing to pay it back, but if you don't have the funds, you might not be able to.
But that could change.
Yeah.
So what
Yeah.
happens if you approve a loan and then, somebody works in the media and they get canned because that's
Right.
happening left, right, and center.
Right.
So, how much of a guarantee do you need?
Yeah, I mean, we've got lots of data. This is really like a big data play where, the credit bureaus have lots of information on millions of Canadians, and so we definitely realize that in lending sometimes people don't pay back their loans right away, or they might be late on payments, and so that's all factored in terms of the interest rate that we charge. So
what kind of interest rates are you charging, or does it vary, and how much does it vary on the person that's borrowing the money?
Yeah, it varies a lot. So we have 28 different loan grades that we'll put people into depending on a number of factors that we looked at that I just explained. And so they start at 5.6%, and it's unsecured, so we can't take back someone's house if they don't pay back. So that's one of the things that's different from a secured line that you talked about before. And they go up. Our average interest rate is about 11%.
Which is still less
Yeah,
than 20.
Right, which is about half of that, that 20%.
So you're doing it on credit, so debt, like credit card debt. But what if somebody, let's say, would you be expanding into things like second mortgages?
Yeah, so people can use our loan for whatever they want to. We loan up to $35,000, and our primary target is credit card debt just because we feel like we don't want Canadians to get more into debt. We actually want Canadians to get out of debt. But there's lots of people who are borrowing for other reasons, like home renovations. Again, in that situation where they've just bought a home, they don't have enough equity to borrow against it. We have people borrowing for weddings. We have people borrowing for small business use.
Do they actually ever physically meet somebody then to sign a contract?
No.
Or, no?
No, we do it all electronically. So people can submit their income verification documents like a pay stub or a tax certificate. They can just take a picture and email it to us or upload it. We verify their bank account through a micro deposit, so we make sure that they have access to that bank account. And then they sign their loan documents online as well. So they just type in their name. They click that they've read and accepted the terms, and then we put the money automatically into their bank account.
How many customers do you have?
We have hundreds of customers.
Yeah?
We're relatively young still, but we're seeing more and more
When
take
did you
up.
launch?
So we launched in spring of this year.
That's amazing.
Yeah.
Just on your phone.
Yeah.
Can you imagine borrowing $30,000 on your phone?
I do everything on my phone. I pay. I accept credit cards with the Square. I do,
Right.
everything. Everything is. I've now accessed our work bank account, my private bank account. I just got to make sure I don't lose it and that it's password protected.
Yeah.
And everything is. I've even figured out how to store all my passwords on my phone, finally.
Have you?
Yep. So, oh God, now she's going to want me to do it for her.
I just want you to clean out whatever it is that I did when I clicked on sign it.
Just learn to keep my mouth shut. So this is, okay, so you do your credit check.
That's
I
right.
understand that. How do we check up on you? You're such a new company.
Yeah, I mean, that's one of the things, it's one of the reasons why we feel like getting on the media is really important, because we know that lots of people at different media companies are going to be doing their research. So we've talked to lots of sort of consumer advocates in the financial services space. So Ellen Roseman from the Toronto Star, as an example, has written a review about Borrowell and thinks it's a great option for Canadians to have. That's been really important to us. We've got a great sort of number of investors as well, people who back us. We're backed actually by a bank, so I think that gives people
That's
some
interesting.
confidence. Yeah, it's not one of the big 5 banks, but it's a bank called Equitable Bank, also known as EQ Bank, and they fund a lot of mortgages. So we think that brings us a lot of credibility as well. That's who's funding the loan. And then we have other investors who really believe in us, have obviously met us and vetted us, including John Bitove, who was the one that brought SiriusXM Radio to Canada. So has a history of investing in successful businesses.
And we are talking to Eva Wong, the Chief Operating Officer of Borrowell. And Borrowell is a new app where you can go on and borrow money at a greatly reduced rate to pay off your credit card debt or some other small thing that you might want.
Or your mother.
Tell us about fintech and that space.
Yeah, so essentially fintech is the sort of short form for financial technology. So there's lots happening in sort of techs and startups, but I think one of the most exciting areas in technology and startups is in financial services. And so around the world we've seen lots of innovation, and in Canada as well, with sort of how can technology improve the way we access financial services.
But you're a woman in it, so
Yes.
how many women are in this? Not many.
No, not many. I think I sort of talk about the trifecta of things that knock women out of this, which is technology, financial services, and startup. So I think there are typically few women in all 3 of those, but when you combine the 3, unfortunately there aren't very many women in fintech.
So you talk about the trifecta. What is it? Are women, young women, risk averse?
I don't know that they're risk averse.
You talk about startup, for example.
Yeah. I think more and more today, as I sort of see young people, there's a lot of interest in startups. Actually, I'm here away from being a judge at a competition called Venture for Canada, which is encouraging young people graduating from university to consider joining a startup. So I think there's lots of interest there, but I just don't know that very many women find themselves passionate about financial services. And I would say that was maybe the same for me as well. Like, I wouldn't have thought that I would have joined a financial services startup, except that financial services is a big part of all of our lives. And I think the thing that motivates me is just the ability to help a lot of people. That sort of financial stress, especially something like credit card stress, impacts all areas of your life. It'll impact your relationships. It'll impact, how you treat your kids. And so I guess that's one of the things that, financial services is such a big part of all of our lives, that being able to make an impact there actually is making a really big impact.
Are you a techie?
So I wouldn't even say I'm a techie. So yeah, I'm not a techie, and I'm not. I don't have a big background in financial services. Not at all. So again, I think that it's one of those things that I don't know if women are intimidated by tech, but there's lots of, in every business, there's lots of different kinds of roles. I'm not in a technical role. I'm not the chief technology officer. And I think it's just a matter of not being scared of or afraid of technology.
Well, but I think that's encouraging to a lot of our listeners who
Yeah.
may be younger, thinking,
Yeah.
well, she's the chief operating officer of this
Yeah.
tech company. She's
Yeah.
not a techie.
Yeah.
She's not particularly interested in financial services, although she is interested in helping people out.
That's right.
So
Yeah.
did it happen by accident or?
So I think it also is about people. So our CEO and I had actually founded a social venture before, so we'd worked together more on a not-for-profit venture before. So that's how we know each other and got involved and got to know sort of how we work together. But I would say that I was also pretty aggressive. I was really excited about this opportunity, and I really wanted to be part of this team doing it. And so I think that's one piece of advice I'd give to women, is just to be more aggressive at pursuing opportunities. I think as an exciting tech startup, we get lots of people who contact us and say they're interested in joining our team and working with us. And I would say the majority of them are men. There's a few women, but it's men. It's 20-year-olds, 21-year-olds who are looking for that summer internship, starting in May or June, who've already emailed me 2 months ago with an amazing cover letter to say, there's nothing more I want to do than to work at Borrowell, based on what I've seen, based on what you're doing. And I would just encourage women, not to be afraid to do that, to be more aggressive, to sort of step up and take the initiative.
Well, Eva, I have two sons who are both involved in startups, but
okay.
I mean, there are different stages to join a startup.
That's true.
I mean, they were at the founding level where you really don't know.
That's right.
Whether it's going to make it or not.
That's right.
When did you join? Because that's
yeah.
really the key, because
Yeah.
asking people to come in when maybe they're just getting stock options. There
Yeah.
is no money.
Right.
You're not making money yet.
Right. Yeah, no, I joined at that stage, at the founding stage. And it is true, it's people don't do this for, the short-term money. But I think that, these days there's not a lot of certainty, regardless of the kind of job that you're in. You could think that you're joining a big bank and that you'll have stability, but we know that's not the case.
Exactly.
A lot of banks have done layoffs, and I would say, don't worry about what the future is going to be. Think about what it is that you're going to be doing in the next 6, 12, 18 months, and I would wager it's much more exciting to join a startup than it is to join a big company.
Well, I think too, there's what I hear in those circles is there's always the talk about the one next door, the startup before that got bought out for X amount, and there are people who just keep on doing, and then they'll go into another one and another one and another one, and I just sold that one for $100 million. Now I'm starting this one, and it just becomes churning them out.
Yeah.
So it's a whole different kind of dream, I guess. They may work for nothing for a year or two, but the dream is that somebody will come along and buy it.
Right. And definitely there is the opportunity to join a later stage startup. I mean, where we're at now, we are paying employees and we have benefits and things like that. So it is possible to join an exciting startup that is funded, that is able to pay a salary. And I think the opportunities and the learning opportunities are really amazing, because and it's exciting. You're building something, and we really feel like each one of us, because we don't have hundreds of employees or thousands of employees, that the contribution that every person makes is really important.
So what's the difference now between a startup and a new company, if you're paying everybody and getting benefits?
Yeah, I think there's an issue of the sort of the pace of growth. So we're not, your local neighborhood butcher that is always going to be, around the same size. We really have aspirations to change financial services for Canadians and to grow really quickly. So for us, startup means that, we've got really ambitious plans to become much bigger and to be really an alternative to Canadians when it comes to financial services.
And are you available to Canadians coast to coast?
In all provinces except for Quebec and Saskatchewan.
And will you eventually penetrate those
markets?
markets?
Yeah, we definitely hope so. Yeah,
Okay.
Regulation's a little bit more complicated in those two provinces, but we definitely hope to be able to help Canadians across the country.
Well, obviously, your target demo would have to be skew younger, because you need people that are comfortable with online banking. I mean, my mother will not. I have to do everything. I have to use my PayPal account to pay for her stuff, because she's not comfortable with online banking at all. So you're aiming at younger people. You're not the only one in the marketplace. No, they do seem to be popping up. But I think a lot of older people would be interested if they bank online.
Yeah.
But then what's the difference between what you call now marketplace lenders and, say, what we used to call sort of, investment people or loan sharks or, how do you weigh?
Yeah, so there's a couple of things in terms of how we're different. One, marketplace means that we actually aren't making the loans ourselves. We have investors that are sort of funding the loans on the other side.
Do you have venture capitalist kind of things behind you?
Yeah, we do have venture capitalists, but we actually have a different pool of investors who are buying the loans, who are purchasing the loans. And we think that actually, structurally, that makes more sense because we don't have any incentive to pad the interest in order to make more profit. We're passing the interest off to the investor. We take a small servicing fee, but we actually are very transparent about being fee for service, the way a lot of financial planners are these days, where it's like, we're going to be very upfront about how we charge you. We're not going to bury our profit somewhere in that, say, 20% interest rate the way others do. The other way that we're different from like a loan shark, and I think a lot of these other online lenders, is we actually are targeting responsible Canadians. So we're not charging payday type rates. We're not charging, some of these charge 40, 50, 100, 300%. And the reason they do that is because it's hard for them to sort of use the technology to figure out whether you're good or bad. So they just have to sort of charge everyone a lot of money because you're going to lose a lot. So I think, we're a bit more sophisticated in how we're doing the pricing, and that's how we're able to help prime quality Canadians. So the majority of Canadians who've got good credit, who could go into a bank, but they just don't want to, because when was the last time you went into a bank? I mean, it's...
It takes a long time to set up our account here, I think.
Right.
But was a whole business account, a whole new thing.
Right. And we actually do have a lot of people think, oh, you must be targeting millennials, you must have like a really young customer base. We actually have lots of older Canadians as well. We have seniors and people who are able to do their banking online. I think anyone who can do online banking can apply for a loan with us. It's not complicated at all. They do have to, have an email address and be able to sort of be relatively comfortable online, but you don't have to, be able to be on all the latest apps in order to use our service.
Now, you came from a background in at Oliver Wyman, Maple Leaf Foods, and the United Nations Development Program.
Yeah.
One of the founding partners came from President's Choice Financial.
That's right.
He must have solid financial background.
Yes.
But why did you decide to make the move personally?
Yeah, I mean, as I mentioned before, I didn't think I would work in financial services. I actually spent a number of years in the not-for-profit space before this, and I know I'm going to work really hard at something. I've got 2 young kids, and so if I'm going to be spending time away from them, I want to be doing something that's meaningful. And I really felt like this was an opportunity to do something really meaningful for Canadians in a way that will actually scale as well. Again, we're hoping to really grow, be able to help more and more Canadians, and so for me, it was just an exciting career opportunity in a way that I really felt I could do something that would be good for society.
It's fascinating. It's very interesting. I haven't sort of heard about it before. Are you looking for people on the other side? Are you looking for investors, people to back the loans?
So we typically have we have more institutions that are backing the loans. In other places, in the States, they do have it's more called peer-to-peer lending, where they actually just have individuals who are investing in the loans, and we'd love to get to that at some point, but right now regulation sort of makes it easier for us to fund them using institutions and banks and things like that.
Cool.
Yeah. But one day, we think it, it would definitely be helpful for Canadians who want to get more than that sort of 1 or 2% on their savings as well. again, one day to be able to invest in these and get a higher return on their savings.
Well, Eva Wong, fascinating. So, and the website is borrowwell.com. You probably get there with a CA
Yes,
as well.
yes.
You can, yeah.
Yeah, you can.
I'm that tech savvy. I need to cover both domains. Thank you very much for coming and
Thanks
telling
for
us
having
about
me.
it.
Yeah, thanks very much.
Click the channel subscribe button for full-length interviews and more from What She Said here on YouTube.